Especially the Chinese People Bank of China is doing some big gold purchases, and this changes a lot for the gold market, for the physical gold market. And this
Gold just broke key technical levels, and analysts say a major bullish move could be weeks away. Let's break it down. First, the market analyst, the great Markus, writes, gold's probability of an upside breakout from the symmetrical triangle has increased dramatically. 4130 was the midpoint break. 4180 is the major break. I expect a major move next month. Thank you for your attention to this matter. So here, Markus is focusing strictly on technical structure, specifically the symmetrical triangle pattern and key breakout levels, 4130 and 4180. That suggests traders are watching these levels closely, not just the price itself. Then another comment from Zero Hedge says, another breakout imminent after support held. This one highlights support resilience, which usually adds confidence for trend continuation, especially in technical analysis discussions. Then Markus follows up again. A measured move is also in play. Trend line breached. The main pivotal area is 4,200, but we are nearing a significant breakout. It seems we are in for a bullish few weeks in the gold sector. So the number 4,200 keeps appearing, clearly viewed by analysts as a psychological and structural resistance zone. And again, this reflects sentiment, not certainty. Meanwhile, Bloomberg reports gold steadied after surging in the previous session due to increased confidence that the U.S. will cut interest rates next month. That connects the price action to macroeconomic expectations, particularly monetary policy, which historically influences gold because lower rates can weaken yields and sometimes the dollar. And then, Investing.com reports Bank of America sees higher gold prices likely to hit $5,000 an ounce in 2026. And that headline leads into more detail. Walter Bloomberg shares the research. BOFA, gold could hit $5,000 in 2026. Bank of America says gold could reach $5,000 an ounce in 2026, arguing that the forces behind its recent surge will continue. Strategists, led by Michael Widmer, say gold is overbought but still underinvested, with unusual U.S. economic policies providing support. BOFA expects gold to average $4,538 next year, and points to tight mine supply, low inventories, and uneven demand. The bank also raised its 2026 forecasts for copper, aluminum, silver, and platinum, but says palladium remains oversupplied. This is a long-term institutional projection, not a guarantee, based on supply conditions, inventory trends, and macroeconomic factors.
Before we roll the clip, here's the context. Markus Bussler explains what he believes is driving the current rally in gold.
To where we're at today, gold has moved, silver has moved. Maybe just work out, from your point of view, what really drove this rally and what is driving it right now?
I think it all starts with central bank buying. Back in 2010, 2011, central banks swept switches from the net seller side to the net buyer side. Especially the Chinese People Bank of China is doing some big gold purchases, and this changes a lot for the gold market, for the physical gold market, and this was the main driver at the beginning. And Kai, we have so many problems in the world, the debt problem in the US, debt problem in European countries as well, especially France, and There's so many problems, and people asking themselves, do you want to be in fiat currencies, or do you want to be some real assets like gold and silver? And I think this is what brings some investors, some smart money back to the market. Remember, when does this bull market started? It started 2015. We hit a low in 2015 with $1,050. We never see this again. So this is the start of the bull market. We have a high interest rate in this cycle. We have low interest rates in this cycle, and gold's steady climbs. So I don't see the interest rates really as a main driver, or the low interest rates, or the change in Fed policy as a main driver of the gold price. I don't see it.
So
This discussion comes from Markus Bussler, who explains why gold and silver have been rallying. He argues that the most important driver isn't short-term market noise, it's long-term structural demand from central banks. Around 2010-2011, central banks worldwide stopped selling gold and became net buyers. China's central bank, in particular, has been steadily increasing its gold reserves. That shift matters because central banks buy physical gold in large volumes, reducing available supply and supporting higher prices. Bussler believes this change fundamentally altered the gold market and continues to influence it today. He also points to broader global issues: rising government debt, political instability, and concerns about economic management in both the United States and Europe. As more people question the reliability of fiat currencies, some investors prefer assets that don't rely on government policy, such as gold and silver. Bussler suggests that this uncertainty has brought long-term institutional smart money back into precious metals. Interestingly, he disagrees with the idea that Federal Reserve interest rate policy is the main driver. Gold has continued rising since its bottom in 2015, during periods of both high and low interest rates. So in his view, the gold bull market isn't dependent on rate cuts or monetary easing. It's more about structural demand and geopolitical confidence. However, he does caution that the rally isn't guaranteed. If stock markets become overvalued and experience a sharp correction, investors using leverage may face margin calls. To raise cash quickly, they might sell gold, even if they still believe in it long term. That kind of forced liquidation could temporarily push prices lower, not because fundamentals changed, but because investors need liquidity. Overall, Bussler's message is that central bank accumulation, global uncertainty, and long-term investor behavior are driving gold and silver, while short-term volatility could still occur.
So when we put all of this together, we have multiple elements: technical analysts watching breakout zones, macro headlines tied to interest rate expectations, and major banks issuing long-run forecasts. Whether any of these play out or not, it's clear gold is attracting attention across different parts of the market. This video is for news, education, and commentary purposes only. It does not provide financial advice, investment recommendations, or predictions. Always do your own research and speak with a qualified financial professional before making financial decisions.